Welcome back, team. We are back here, and thank you for joining us again, Joel. Good to have you. How have you been?
I'm doing well. Thank you, Fabio, and it's always good to speak with you. I learned a lot from you and the community, and I see it as a tremendous opportunity. And one of the things I always keep in front of my thinking process regarding trading is risk management. And because every time we meet, we talk, it's always like, what's your risk management plan? And as today is like a big move in the market, I think it's prudent to discuss how I risk manage, and hopefully it'll create some an interesting conversation.
Yeah, and as always, guys, send us comments, questions. So today, of course, the market opened really down. We obviously had a big event yesterday. The futures were down almost 4% or more than 4%. And of course, now we are open here. So I think, Joel, today you're going to go over some points that obviously traders should look for, but also those points could change immediately, right? They could change very fast based on catalysts, based on events. So we need to be ready to react. So I'll leave it on to you and let us know how you prepare for the week. And then we're going to look at some charts, some examples, and some data as well.
Yeah, absolutely. Thank you. Thank you very much, Fabio. So what I'm going to start with is an image of the S&P 500. This is a daily chart of the S&P 500 dating back to the move from October of 2023. And, people can see various different lines on the chart and different arrows. Some people like technical analysis, some people don't. But what this really demonstrates is really the supply and demand of trading from lots of different time frames, right? So, you have various large money players that are trading billions of dollars, week to week, month to month. And then you also have, players of different time frames entering as well. Small players, big players. So I'm a much smaller player, retail player, and I'm going to describe how I plan and how I risk manage for trading. So with that being said, let me go through some of the key points. So I treat trading as a business, as my full-time job. And the things that I generally do is that on the weekends, I put together a weekly plan for myself, which lets me know where I want to engage in the market, what are the key events that are happening this week, what is the data telling me regarding how the market is positioned, like big players positioned. I use the MenthorQ data to give me that viewpoint. I look at the auction process, which it also provides volume, and we'll get into it a little bit, and tells me where there's significant volume in the chart over the last 10, 20, 30 days. So those are some things. So in addition to, that's what I look at from a weekly basis. So on a daily basis, I have a daily plan, which I prepare for myself, which discusses what are the key events for today, what are the key levels for the market that I'm going to look at. So that's what I'm going to do. And then I take a top-down approach to the market and look at what is the S&P 500 cash index, the S&P futures, the Qs, which are the NASDAQ 100 ETF, and the NQs. So what are they doing? And again, I do this on both a weekly basis and then on a day-to-day basis. So the questions I generally ask myself are, how are major players positioned? What's the message that the smile curve shows? And I'll go into what the smile curve is, but I'm just trying to list some of the key points here. What is the message from the term structure? is the market in a positive gamma or a negative gamma environment? And I'll go through what that means. What is the trend of the key levels over the last couple of weeks? I will look at, and then what is the potential trend of how major players are positioned over the next 2 weeks. So there's data which provides that on the MenthorQ site, which is a matrix of dates which shows the key levels. Key levels being the put support area, the high volume level, call resistance. So, and then I ask a basic question of myself: are these levels trending higher or lower or remaining constant? So, what is the implication here of what's happening? So, I'm trying to gauge again on a daily and a weekly basis of how players are positioned in the market, so I can take advantage of that.
And let me ask you a question, Joel. How
Sure.
important for you the option market? Because you mentioned obviously the smile curve, the term structure, all those two charts are derived from the option market. Like from your perspective, so you've been doing trading professionally, I think, for about 3 years, if I'm not mistaken. How have you, and you've been in banking for a lot of time in your career, how
Right.
for people that are new, like especially for traders that maybe are not really doing option, what's your take on the importance of options in today's market and obviously going forward?
I think it's very, very important. It really provides a couple of things. Is the option market allows you to take a viewpoint of being long, short, or neutral based on a lot of different factors. So I think that's important. And it also provides you with leverage and risk management. And if it will allow you to provide yourself with risk management in a very controlled manner. So up front, you know exactly what your risk is, and I think that's a really important criteria, especially with the S&P 500, which is like the most heavily viewed market in the entire world, and with the factor of DTE, 1 day DTE expirations in the SPX, what that says is that someone could hedge their risk on a day-to-day basis. So that's really the significance. So if someone's just looking for managed event risk, they clearly can do that. So I can give you a very clear example. So on Monday, there was JP Morgan has a hedge fund, I don't know what they call it, where they take off a position and they put on a position for risk management. However, in order to not move the market significantly on this particular day, they use a 1 DTE or 0 DTE expiration to manage it, to lower their cost in the trade, but yet still manage it as they take off the old position and put on the new position. So I think those are some of the really key things for it. And going forward, I believe this will continue to only increase. That's why I think it's a very, very important part of my trade plan. I would say I look at lots of different things, and that's really one aspect. And for me, what's most important is when I find correlation between what the chart says versus what the data says. When I find that, it suggests to me that I have a high probability situation, high probability trade to make. So I'm not sure if that answers your question or not.
Yeah, absolutely. I think it's very important. And maybe we can go and see some, your preparation for the weekend, last weekend, and then how you basically change that to the event that is happening right now with the tariff situation.
Right.
how can also a user that is looking to mimic your approach can use the data for that.
Yeah, absolutely. So what I'm showing here is just the S&P 500, which is that daily chart. And I've arrowed some very, very key levels. This inflection point here, this line here, is, as I see it, is really sort of like a bull-bear line. So when, and if pretty obviously, the market bounced higher off of this level a number of times and then most recently broke through. And, again, this is just data. This just is. It's not my opinion. It's just, this is just a fact. So it just says to me that from a longer term perspective, that the market is in distribution, that ultimately large players who control it are selling the market. So when we have bounces in the market, it gives them an opportunity to sell. So that's what this shows. And these are just like, this is like a current trend line. And this is just another level on the chart dating back, much longer. But so that's so that's really sort of the key thing from the chart. And then from a data perspective, what I'll look at. So let's sort of get into that. I'll show you what I will look at on a day-to-day basis. So this is the MenthorQ webpage, and this is the data for the S&P 500, and I'm showing you 330, which was the action from what last week, as of actually I guess it was Sunday. So really shows the action as of the end of last week. So this is part of what I do on the weekend, is to look at this data. So the MenthorQ site provides some very useful historical information. So I could just easily click on the day and go back to a point. So I'm just demonstrating what I did then. So if we scroll down, so I'm just going to go through some of the very key things that I will look at on a day-to-day basis. And since this is the weekend, I will show you this. So this chart is the smile curve. It's one of the, from my perspective, one of the most important things to look at, because this really tells you exactly how players are positioned. So from left to right, you can see it looks like the Nike swoosh, but we can see the huge move higher here. And this is really what this is showing you, is that major players are heavily positioned for downside risk. That's what this is showing you. And what it also shows on a day-to-day level is that if you look at this, at the list here of how this grid is, how this picture is formed, you can see is what is it today, which is the green line, versus yesterday, versus 5 days ago, versus a month ago. So it clearly shows how major players are positioned. When people put their money out there, that's how people always talk their book about what they're doing or not doing, or what the current narrative as to why the market goes up or goes down. It's all irrelevant. What's relevant is what's in the data and where people put their money.
And Joel, sorry
yes,
for interrupting you. Basically,
go ahead. No, please.
I think this chart is very powerful, and later after the session, Ryan is also going to show us from an ex-market maker standpoint how to look at volatility. Can you maybe trim it down for somebody who's never seen a chart like this to how you would use it in practice? Like basically what are
Okay, so I'll tell you how I use it.
Yeah.
So for me, because the market has been in a negative gamma environment, and I showed you that chart of the S&P 500, which shows that the market is in distribution. So for me, what I'm looking to do is collect premium on a week in, week out mechanism, to generate income. I'm not looking for that home run trade, which is to basically just buy outward puts and look for that home run trade. I'm not necessarily expecting a 3 standard deviation move on a day-to-day basis. I'm looking, for a high probability situation. So with that being said, I'm looking to sell delta. So what does that mean? I'm looking to sell calls in this marketplace because the market goes down. So what I'm looking to do is when calls get expensive, I'm looking to sell in this region here. When calls get pumped because we have a short squeeze, and you just have to know, you have to just observe when we have a call, a short squeeze. Like for example, this week the S&P bottomed, after this on Monday. There was 25% of the gamma that expired on Monday. So I have made an assumption that gamma really was bought and that it would then have to get sold. If it has to get sold, it will essentially cause the market to go higher. How much higher? I don't know, but it will act as a catalyst. And if you have momentum players involved, they will potentially push it higher as well. So my thinking is to sell calls when we have a gamma squeeze, that I see as the higher probability way of making money on a week in and week out basis. And in general, I am negative delta on a week in, week out basis. And longer term, I have some longer term put spreads that I have bought and will capitalize on that periodically. When the volatility comes in, because volatility is mean reversion, it's not time based, but really it just is a range, right? So when the volatility comes in, meaning going lower relative to some moving average that I look at, then I will go out and buy volatility from, in a longer term place. When we have large moves down, I'll look to capitalize that and take those long puts off. So that's what I'm doing. Over this year, I'm going to try to engage where I judiciously look to place long vol, meaning put spreads or just long puts with a lot of time out there, because I believe that as I said, that the market is in a longer term distribution. But like any, you have to understand this is a random walk, and you don't know when the market's going to go up. You don't know when it's going to go down. And you just want to place your bets scattered through time, lots of small bets to increase the probability of making money. So I hope that answers your question, Fabio.
Yeah, absolutely. And let us know, guys, if you have more questions on this. And
okay, I'm going to close this one. I'm going to look at the term structure. What this is, it really shows at a glance. Again, it provides positioning information, but it's a slightly different view of how major players are positioned in this market. So I'll briefly describe what's going on. So on this particular picture, again, green is today, which was, again, we're going back to the beginning of the week. So this is my Sunday homework, so to speak. And again, Fabio shows the how does today relate to yesterday, 5 days ago, and 1 month ago. So the green line shows today. Again, this was Sunday. I was looking at this. And this clearly said we expect a spike in volatility this week. Okay? You didn't need to know that the tariffs were going to happen this week. All you needed to know is that data said that there was going to be event risk. And if you understood that there was event risk and that people were hedged, then that's really sufficient. Whether you decided to put on a trade to capture this is a different answer, but at least you understood what potentially is happening. So now a couple of other interesting things here is we notice that once there is event risk and it's taken out, you can see that it initially will slide. Again, is it going to slide this day of it, or will it happen the following day or the next day or a few days out? What it's showing is that it will slide over a period of time. You see this nice stair-step decline. And this is useful to know, for selling volatility. So this is what I will look at as well. Is there any questions regarding this particular structure?
Not from the audience, but yeah, I mean, this one is a very interesting chart for sure.
Right. It's probably also one of the most significant things that you provide. And it's something that I look at on a daily basis, much as I look at the SMILE chart. So this is key data point number 2. Okay. So I'm going to close this one. So the next thing that I look at, again, this is all in the vein of like risk management, I think, because if you don't risk management, you won't be able to play tomorrow. Okay, this structure here, this is the option matrix, which is a, you can think of it as just a grid, think of it as a grid, which has very, very key data points. And it clearly shows you the GEX, the DEX. This is GEX, the DTE. So means 1 day of expiration, 2 days, 3 days, etc., with the days listed. And it shows you here's the total. It's aggregated over this entire period. And you can see how much expired on Monday. Again, I didn't need to know about a particular hedge fund basically moving a position. It's all here in this data. So I didn't need to know that. And you can see that all of this is red, implying that it's all it's all embedded with puts. You can see that very, very clearly. You can see relative to the whole profile of data here, if this is 100%, 24% was going to expire on Monday. So this was a key point for me to say that we would have a short squeeze. Did I know it was going to happen on Monday or Tuesday? I don't know. However, it does say that since this was negative and this is 24% negative, that's a very significant amount relative to the total. And it suggests that if it's negative and people are long puts, that those puts will get monetized. If it's monetized, means that they will get sold. And that will potentially create a floor at a minimum. And then potentially, if there's some momentum players involved, they will potentially move it higher. How high? I don't know. But what we saw was a gamma squeeze of 200 points from the low on Monday. So this is something I posted on Twitter or X on Sunday, which got a huge amount of engagement. And some people that even, said, well, this is not the bottom, there's much further to go. And I'm not looking at it from that perspective. I'm looking at this particular data point. And there are people that try to infer more than what I'm suggesting. Yeah, Market can go lower, market can go higher. All I was suggesting is that there was a very high probability of there being a short squeeze. So this piece of information, this line here, provided a key point for me to understand that there had a high potential for a short squeeze. So it just allows me to be more prepared for that possibility. It's not totally random that something happens, that it will happen. It's not if, but when. And these are just some of the key inflection points at that time. This was a level where there was a huge amount of call exposure, a huge amount of put exposure. This is just an area where this is an inflection point of puts versus calls at that level. And I'm not sure that it's necessary for me to go through that, all the level of that detail or not, but this is really what I'll look at from that perspective for Monday. And then also we can see, again, it's buried in red or buried in puts, and you can follow the trend here of where things are going. So again, this is Sunday, and it's a dynamic world. So what exists on Sunday is not set in stone, it's set in sand. And again, you have to look at this stuff from a day-to-day basis and plan accordingly. One of the people that I used to be connected with from a trading perspective said that just because the day ends in Y doesn't mean it's a trading day. So, it's important to pick your spots, where you want to engage, what your risk management is, et cetera, et cetera. Are there any questions regarding this particular useful chart, Fabio?
Not yet, no. I don't see any.
Okay, is there anything I should go over that you would find interesting to talk about?
I think one interesting thing is more like, have you used, for example, some of the new models that we've developed? Like, have you started looking at the scores? And let me know if you have found them useful as well.
I look at that as an indication of where things have been and where things are. But to be perfectly honest, I would like to see some more historical information if it exists. I think that could add greater value from a longer term perspective. I'm not doubting the usefulness, but not understanding totally how this stuff works. I mean, I'm an engineer by school, and, I wrote software for a living for many years. So for me, I like to tinker and understand in a deeper way how stuff happens. But for a lot of people, they may find this stuff very, very useful because it's sort of, black box, green go, red stop, so to speak. And this is kind of, interesting things, the seasonality, what the current momentum is, et cetera, volatility. So one of the things that I will do over time is just monitor this and potentially use it, in some future trades. So is there any future plan to post some like historical information about it?
Yeah, absolutely. We are working on a lot of tools that will bring in historical data, will bring in historical levels. So it's all in the works.
Yeah, so I think with that being said, I think there is some real potential for the usability of this, especially for people that are less, they're looking maybe more for like red light, green light type of thinking. In all fairness, this stuff is fairly complex, and but you can take it to whatever level you need to. In order to be able to, trade and make a living. And as I suggested, options will allow you to leverage or to risk manage, to allow you to have both a a bullish bet, a bearish bet, and a neutral bet, which is amazing that you can do these kinds of things with it. So that being said, it's only becoming more relevant, not less relevant. So those are really kinds of things I'll look at.
Yeah, and if I can add, maybe let me share
Sure.
my screen.
Yeah, go ahead, please.
One of the interesting things that we do have is the screeners. So, for example, we have different types of screeners. We have gamma screeners. We have our gamma level screeners, open interest. I think it's very interesting to start looking at volatility screeners. So, for example, I was looking at some of these. Like, so if you're looking at playing, the market with options, if you're looking at option strategies, and then in about an hour, we're gonna have a session with Ryan where we're gonna talk about volatility, but looking at these types of information and looking at those companies, like for example, Google is at the highest volatility it's been for the past year. So I think knowing that could be very interesting. Palantir, we have it here. We have EA Sports, IBM, right? So those are all names that could be interesting to look for from an option perspective. And then, of course, we have our gamma screeners that we can use for example, to look at the highest change in DAX or JAX, and look at, for example, some of these names that could be in your portfolio that could be interesting also to understand what is the market doing and why are we seeing, in this case, like the highest negative change in Delta. Meta is there. Like, what can Meta tell us and how can we read the data? And then we can open up the stock and we can go into the details. We can clearly see that we are at very high volatility. The option activity is still neutral and we have no seasonality on Meta, but then we can kind of go down and look at the different models that also Joel was showing us. We have our term structure, our smile, and and start drilling down from there. But the screeners can really give you some nice ideas on what's going on coming from the option market.
Right. So yes, I actually have started to look at that as well. And, as we are in a negative GEX environment, potentially look for, and you can show this, is what stocks are at the call wall.
Yeah.
I think that could be useful because that could be a potential short. So let's see if we can find something that's got some, good, a good tight spread. Because one of the things that's important for trading options is to make sure that there's liquidity.
Yeah.
And you want to trade something that has tight spreads. And, there's a lot of action and it trades weekly if possible, if not at a minimum.
Yeah, so we have Dell, we have obviously NASDAQ, so we have our NDX was at core resistance yesterday, so you can come here and look at our levels. I think it was right here.
Yeah, so it already happened. You missed it.
Yeah, this
or
one.
We missed it.
We missed it. This one could have been played with the futures overnight,
Right. No, absolutely. There's lots of ways, but clearly, there's not a whole lot to do when the S&P drops, 4% overnight.
Of course.
But yeah, but that's how I would look at it. So potentially what we can do is look at the, when we have a short squeeze, because it's not if, but when. And so, the next couple of days when the market forms a balance and goes higher, it could be something that we could look to do. Again, we're going to get into it. We can put that in our weekly list of things to watch.
Yeah.
And when it hits that inflection point, then we can look to do something.
And the other thing
I would imagine that anything that's. Go ahead. I'm sorry to interrupt you.
No, sorry.
No, it's okay. It's okay. No, all I'm saying is that just add it to your weekly watch list, and just take the trade when the movement occurs.
Yeah, and I think one of the other important things that we got this morning was, of course, the market opened 4% lower. And the end of day levels, of course, were kind of broken, right? Because the market closed, and of course we had the event after market. So the answer is, if you don't see the levels coming from the end of day, then obviously we also have intraday. So for example, if you are trading NASDAQ or NQ and your end of day levels didn't really show you the path or the roadmap, take a look at the, for example, intraday levels from QQQ from, I think now it's 10 a.m. But basically this shows you, like, for example, your 1-day mean on QQQ could have been a really nice reaction area. And then again, this was a very strong move from level to level. So I think the tools are available for you. Just obviously learn how to use all the indicators, and there's definitely a lot of value there.
Yeah, there's a huge amount of tools in the toolbox here, and I do look at this particular chart when I'm entering a trade as if I'm a net seller of calls, I look for it to reach the higher level, the call wall, which you can show, which is the top of the screen.
Yeah.
So, I mean,
yeah. So here
you also can use it as an area as to where's the inflection point, where's the gamma going to turn. But I'll look at it on an hourly chart because, or half an hour at a minimum, because I don't really want to get caught up in every little swiggle. But I'm looking for an area to potentially engage in.
Yeah, I mean, this was a very, very, like, if you look at this, obviously the market.
That was a great move.
Was a great move.
If you caught that move, that was a great move.
And then, of course, if you look at this chart, you not only had your intraday levels on QQQ at the open, but you also had your end of day. So your put support was the first level, and then you had your 1-day minimum, and just below this was your put support from QQQ. So you have basically a very big area of a lot of option activities going on in this area. So of course, this can become a reaction like we saw in this move here. And this is like
Right.
100 points. So it's like very, very strong move.
100 points in 10 minutes. Yeah. I mean, this has been, if you day trade, this is like a great market for that. Yeah. So, but it's all about risk management, and these levels will provide you with good level. You don't have to trade NQ. You can look at the NQ chart, but trade MNQ because there's lower risk with that.
Yeah, and for those who are more like technical traders, the idea behind it is that it's really like technical analysis, but using option data. So it's like support and resistance areas coming from the option market. So in this case, like, where do you draw your support when the market drops 4%? So now you have an idea of the levels where the areas could be. So here could be your rejection area that we saw here. And it doesn't mean that the trend is reversed, but it means that if you are day trading or scalping, you can catch this move, and obviously for a very, very good profit. 100 points on NQ it's a lot.
Right. It's really understanding your time frame and not turning that trade a scalp into a long-term position. So again, it's all about the plan. What is your plan for that? And if you know that you're just going to scalp, this is a great environment for scalping, or just like going in, spending an hour, taking a trade, and getting out, and you're done. For me, I look to be mostly in cash on the weekend.
Yeah, of course.
Well, not everyone views it that way, but I think it's prudent right now to do that. Take your trades and do that. So I think this is very, very useful to go through.
Yeah. So let's see if we have more questions, Joel, and if not,
Sure.
Is there anything else that you wanted to add? Any other topics?
The only other topic is I would have shown what the auction market was saying.
Okay, yeah. I'll let you again.
Okay.
No. I think we. What screen are you sharing?
I'm trying to. It says stop screen.
Okay, I don't see your chart anymore. So
Okay, let me
yeah, and then
go
in the
back.
meantime, guys, if you have questions, let us know. We are here for you guys.
Okay. Let me know if you see my screen.
Yeah.
Okay. Do you see the volume profile?
Yeah.
Okay. So one of the things that that I believe is an edge, and again, I use this in conjunction with the data, and if the data lines up with what the profile shows, I view that as like a high probability trade. So this is the volume profile of the S&P futures, and this is aggregated 30 minutes, 20 days. So again, I look at this in multiple timeframes, but I won't bore you and show all the different timeframes I look at. But clearly, what this is showing is that this statistically 70% of the volume is from this brown line to this brown line. So in this case, that's 55.93 to 57.72. And we're clearly at the outer edge of that. So from my perspective, I would look to as a potential area to sell into would probably be this high volume node. If you notice, there was a huge amount of volume here. This is that 56.26 area. So I would then look at the option market and look at the the smile curve and the other things I demonstrated to provide, to show whether it makes sense, and then look, to put on the trade where I have a spread, where I have a long in front of a short and a fairly large space between them, so that I don't get blown off. So this is just something I look at as well as far as my trading is concerned. This is something I augment with the data. Is there any question about it?
I don't see any comments. Yeah, not sure. Let us know, guys. And yeah, if not, yeah, that this is awesome. I think learning how to use a smile, learning how to use a term structure, looking at the data, I think is very key. And basically, yeah, like basically leverage the data that is in front of you. And then, of course, we saw, if we go back to our chart, we saw how these areas, how the option market can become really important, right? So now we see those are like key levels that you can put on your chart to understand how much you can risk first and how much you can also make based on your risk profile. So I think Joel today showed basically some other models that can be also integrated in this analysis and leveraging the full power of the option data.
Right. So here you can see on the screener for today, you can see that NDX is really at the put support. So if you are a bit risk of, again, this is NDX is like the triple Qs. So you can potentially look at that. If you believe that the market's going up, volatility is very high today, you feel that we will mean revert, maybe, again, this is not telling you what to do, but, a suggestion is maybe sell a put underneath this, well underneath this level, 30 days out, something that has a fairly high probability of making money. So this is for today. This is the NDX.
Going back to the NDX,
Yep.
we have the intraday levels. So take a look at how the one-day minimum on NDX really played out for that move. So when you think there's no level, we have intraday levels. They update every 30 minutes. So you have this data automatically updated on your chart, and there's nothing to do. You just have to add the indicator. It automatically updates with the level, and you can go from one stock to the other one, and the levels will be already in your chart. So I think the X was a great example.
Yeah. So So here, I mean, this came up here in the screener for put support. I'll quickly demonstrate this. You can see NDX. If I click on the NDX, it's going to bring me up to the page that shows the various models that we discussed earlier. And also, you know, you could then look at, you know, for example, we could look at the small curve for this too, which would tell us here's the volatility small for this. And you can see this is very, very heavy put dominated. Look at, you know, this is at whatever 25% level. You can see we go out 19,000. We're here. So again, you know, you got to manage your risk, but this clearly shows that it's such a put dominated environment here. You know, maybe time to look at looking in the other direction. When everyone is short, it's probably the time to go long. You know, as they say, as Warren Buffett said, when there's blood in the street, buy. So, and here's the at-the-money term structure for NDX. The similar picture to the S&P 500. Notice that there's a huge vol crush here. So we're here. This is today. And you can see, maybe not today, but, you know, over the next few days, you can see this thing just like goes from 43% to 23%. So sell something that's far out of the money, and I think you will get rewarded. Again, look at the option chain. Look at where there is interest. You know, do your due diligence. Don't just do things without thinking it through. Have a plan for what you're doing. Notice here, 5. This is probably 5. Look, if we go out 20 days, look how it goes down from 43 to here. It suggests to me that we've already moved 10 or 15% in the S&P 500 and the NASDAQ. And I would not necessarily expect, this is basically saying to me that the move is essentially done, and that people are going to take off their hedges right now. This will potentially fuel a market higher where we would see like a bull trap, as I showed you in the earlier picture of where the S&P was showing distribution. So that could be an area to engage and buy long puts for your portfolio, or trade the VIX. You know, lots of different ways to trade this market. That's pretty much it. I don't know. Is there a question about the NASDAQ 100, the NDX? If you don't like this one, you can play the Qs.
Yeah, I don't see questions. Not sure if maybe there's an issue with the comments, but yeah, if you also want to look at the Qs, here is another chart of the QQQ intraday levels, right?
Okay.
Yeah.
Are you sharing? Are you sharing your screen, or?
I'm sharing, yeah.
Okay, perfect.
All right. Yeah, I don't see any question, Joel. So I think we're going to be back in a week or so. We're going to post the schedule online, and today we're going to have another session. So if you guys don't follow us on YouTube. We're going to have a session with Ryan. We're going to talk about volatility in more details from a market maker standpoint. And tomorrow we're going to close the week with Patrick. And then, of course, we're going to be back next week. So all our lives are here. There's a lot of really good content. So just take advantage of that. There's a lot of really, really important traders and professionals that are part of these lives. So there's definitely a lot of things to learn. And then with you, Joel, we're going to be back maybe in a week or so. We're going to put together a schedule again, and we're going to talk more about how to use advanced tools to potentially build a trading plan.
Okay, awesome. All right. Thank you very much. We can discuss. All right. Be well, stay safe. Looking forward to the next one.
Yeah. Thank you, guys. See you soon.
All right. Take care. Thank you.